Hello. Today is Sunday, August 2nd, 2026. Here is your daily signal. Chevron has posted its largest quarterly profit ever, while Exxon also saw income surge as the U.S.-Iran conflict continues to squeeze global oil supply, according to Fortune. The recent U.S.-Iran conflict has disrupted oil shipments through the crucial Strait of Hormuz, sending Brent crude prices above $100 a barrel for much of spring 2026 and pushing fuel costs higher worldwide. Major oil and fuel players such as Chevron and ExxonMobil have benefited. Fortune reports Chevron's profit nearly quadrupled, while U.S. drivers are now paying around $4 a gallon. The Associated Press notes that as fighting between Iran and the United States impedes shipments, oil company profits soar. Near-term, oil and fuel costs are likely to remain elevated due to ongoing disruptions, and the U.S. Congress may advance windfall tax proposals on these record profits. In the medium term, a prolonged conflict could trigger even greater volatility in global energy markets, and while corporate profits may remain high, they face mounting regulation and public scrutiny. Asia is now driving 60% of global growth, but according to Fortune, the region's CEOs find it impossible to escape geopolitical tensions. This crucial growth comes despite challenges like regional fragmentation and shifting demographics, especially as countries such as Japan and Singapore contend with rapidly aging populations. Experts such as BCG's Yasushi Sasaki stress that resilience, regional capital, and multi-market strategies are essential for Asian companies to stay competitive. Fortune highlights examples like Singapore and Japan, where forward-thinking health and labor policies turn aging into a growth opportunity. On July 30, BCG Sasaki told Fortune that adapting to geopolitical risk is key, and on July 31, AMRO emphasized that if health and labor policies align, population aging can be a net positive. In the near term, more Asian firms are likely to diversify regionally to mitigate disruption. Over the longer run, successful adaptation with robust social policies could maintain or even increase Asia's global economic share, while failing to act may drag on innovation and competitiveness. Policy-driven reforms are set to draw increased investment into sectors like healthcare and workforce training, and multinationals are watching closely. A new report from Next Big Future highlights a critical shift in artificial intelligence. If everyone can access powerful open-source AI, few may be willing to pay for commercial options anymore. For years, proprietary commercial models and exclusive services defined the AI market. But in 2026, open-source projects like DeepSeek have reached the point where they match commercial AI performance for up to 95% of user queries. The abundance and accessibility of these advanced models are already starting to reshape how the world perceives value in the AI industry. The article notes that DeepSeek and other projects now perform almost indistinguishably from commercial models for most tasks, disrupting old monetization patterns. In the short term, commercial AI providers could face sharp revenue declines as more clients turn to free or low-cost alternatives. Over the long term, the focus may shift instead to unique proprietary datasets, customer support, integration, and specialized solutions as open-source commoditizes the core technology. This abundance could ultimately reduce incentives for premium pricing while driving demand for customization and system integration as investments move beyond purely model-centric businesses. Now, onto the markets. International equities saw mixed moves. France edged higher with EWQ up slightly, while Germany was little changed as EWG slipped less than 1%. The United Kingdom pulled back, with EWU losing about 0.5%, and Italy followed a similar path. Spain advanced marginally as EWP rose. China large-cap stocks remained near their recent peak, with FXI up over 14% month-on-month. India gained again, with INDA up modestly for the day and nearly 1.2% for the month. Taiwan showed strength with EWT up over 2.7% day over day. In commodities, gold and silver prices retreated as GLD fell nearly 1.5% and SLV lost over 2%. U.S. oil jumped, with USO gaining more than 1.3% on the day and up 25% in a month. Among favorites, Microsoft surged over 3% day over day to new highs, and Amazon soared above 15%, the top gainer in the group. Nvidia and Oracle also posted gains, while Apple fell over 7% for the day, leading the group's declines. In key sectors, the S&P 500 was up slightly, while semiconductor shares and stocks were steady but down sharply over the month. Financial and healthcare sectors each slipped, and real estate logged mild losses. That's it for today. You can find more news and details on our website. Goodbye.